Hi, this is Mijun from Make Juice Silwan University. Let's begin today's Mike Juice in News for November 4th. Welcome to Mijun, where we make United States stock investing simple and hassle-free by sticking to the basics. I couldn't send you today's Make Juice in News broadcast yesterday. Because of visa issues, I traveled to Singapore with my family. Instead, I shared with you a video of the United States Stock Elementary School that I had pre-recorded with Chief Executive Officer Kim In-jung. These days, many of you are curious about my family's life in Southeast Asia. So let me briefly summarize our trip to Singapore. It was a short trip, but it was very different from Kuala Lumpur, where I'm currently living. First of all, it rains very often and for a long time, and it's much hotter than I expected. Since it's only an hour away by plane, I thought the weather in Malaysia and Singapore would be similar because they're close by. But after visiting, I realized Malaysia is actually a much cooler country. I used to live in Indonesia for a long time, in places like Bali and Lombok. And the weather there, I would say the weather in Singapore is almost on the same level as those places. And another thing is, during November, December, and January, this Southeast Asian region is in the rainy season. So I thought it would be better to avoid traveling to Singapore during the winter season. Anyway, after going back and forth for 3 days, I got another tourist visa that allows me to stay for 30 days. Now, during that period, I'm going to apply for the Malaysia My Second Home visa, which I mentioned before and is called Malaysia My 2H. After 3 months, I think I'll be eligible to stay here long-term with a 5-year visa. I'll try to find an opportunity later to share more detailed information about life in Malaysia with you all. Alright, there were a lot of comments from you today as well, so let me take a moment to read a message left by Gyeong Yoon V. You gave feedback after watching the American Stock Elementary School video I shared yesterday. Is American Stock Elementary School difficult? It feels more like American Stock University than elementary school, as the level keeps rising. Is it just me? Since it's impossible to match everyone's level, I guess I need to try harder. Thank you to both of you for your hard work today. First of all, it's been about a year since the United States Stock Elementary School started, so it's true that the level keeps going up little by little. And since there are people who have been watching the show consistently from the beginning, I tend to skip over some of the repeated content when I explain things. So what's the solution for this? I'm planning to prepare a lecture specifically for real beginners soon. So if you could just wait a little bit, I'll have something ready for you soon. I'm planning a lecture program that will build your foundation step by step, starting from the basics like PER and explaining everything in detail from the ground up. It would be great if you could wait just a little bit longer. Until then, there is one way you can try. You can rewatch the first episode of the American Stock Elementary School series. If you reviewed the previous videos, I think it will help you a lot in understanding the recent videos. Alright then, let's get started with the United States stock news for November 4th, the first one in November. Alright then, let's go over the United States stock market summary for yesterday, November 3rd. First, if you look at the S&P 500 map, both the S&P 500 and the Nasdaq index actually closed in the positive yesterday, but if you look at the S&P 500 map, there were actually a lot more stocks that went down. Well, nevertheless, NVIDIA, the company with the largest market capitalization, surged more than 2%, Amazon was up a whopping 4%, Tesla rose 2.59%, and Google also went up 0.82%. Now, since there were many megatech companies that surged like this, the major indexes closed higher. But the overall market situation was actually on a downward trend. I think that's the right way to sum it up. If you look at the performance of the 11 sectors that make up the S&P 500, more sectors declined yesterday. Consumer discretionary sector, backed by Tesla and Amazon. Consumer discretionary was already up 0.94%, the best among the sectors. And technology also rose 0.41%, helping to support the overall market. But even so, The breadth of the market must have worsened a lot, right? Now it's dropped below 40. Out of the 500 companies included in the S&P 500, only 38% of stocks have a good short-term trend. This is very negative. The long-term trend is still okay for now. 53% of stocks are maintaining a positive long-term trend. That's how you can see it. So, from here on, we need to monitor whether a rebound is possible or if momentum will continue to worsen for most stocks, except for a few as prices keep dropping. Next is the market fear index. The fear index is still okay for now. It's at 1717. It's still well below the average VIX of 20, and since it's also below the 200-day moving average, the fear index is telling us that there's no need to worry just yet. Next is the fear and greed index. The fear and greed index had been rising for a while, but now it's started to decline. Of course, there was a brief rebound yesterday, and now it's gone up to 44. Now, we need to take a look at how the trend is determined from here. If it had broken through 50, it could have turned into a positive trend, but it didn't, and it fell again. They're still struggling for dominance. I'd say that the positive and negative sentiments are facing off in a tight tug of war. It's the same with Miju on top pick. Yesterday, it went up by more than half. However, several stocks also declined. First of all, Thailand Energy maintained a positive trend with a 3.44% increase. Second, Palantir rose 3.35%, Tesla 2.59%, Vistra 2.52%, Nvidia 2.17%, Taiwan Semiconductor Manufacturing Company 1.47%, Advanced Micro Devices 1.38%, Celestica 1.32%, and Ethereum is listed as up 0.96%. However, Ethereum has actually dropped sharply and is now at 3,641. In addition, Google is up 0.90%, and Bitcoin is at 107,050. Let's review the stocks that have dropped. Pearl Solar is down 0.46, Meta 1.64, Strategy 1.80, Broadcup 1.92, Credo 3.72, Coinbase 3.89, CoreWeave 5.53, Bit 6.79, and Bitmain 8.12. Lastly, because Ethereum didn't perform very well, ETHT plummeted by as much as 15.49%. So first, I'd like to briefly explain the reason why Ethereum's price dropped so sharply. I found an article saying that Ethereum dropped by 7% due to the aftermath of a decentralized finance protocol hack. As it says here, it can be summarized that the drop was due to hacking. Now, if a hack occurred, we need to check what kind of hack it was, whether this hacking incident is a one-time event, or if there is a fundamental security issue with cryptocurrencies issued on Ethereum. Fortunately, what are the market's reactions and experts' evaluations? The name of the Ethereum protocol that had the problem this time is Baleonseo. Now, regarding the Baleonseo hacking incident, rather than seeing it as a fundamental security flaw of Ethereum itself, it's more about the Baleonseo protocol. It is being reviewed as a vulnerability in a decentralized finance app's smart contract. That's a bit of a relief. But at the same time, this also highlights the ongoing structural risks in the entire DeFi ecosystem. Now, first, let me explain why this is a one-time issue. Most DeFi hacks aren't caused by security breaches in the Ethereum blockchain itself. Instead, all known hacks have targeted individual DeFi protocols built on top of it. For example, like with Balancer now, or previously with Curve, Finance, and Uniswap, these hacks have occurred by exploiting logical errors or bugs in the smart contract code. That's how you should see it. And now the Balancer hack too. It's overwhelmingly likely the flaw was in Balancer protocol code, not Ethereum itself. However, despite that, the price of Ethereum temporarily plummeted. Certainly because it occurred in a major DeFi protocol, Balancer. It's because over $100 million was stolen. So, it was inevitable that there would be a temporary shock and a decline in investor sentiment. Well, nevertheless, the Ethereum network wasn't shut down, nor was its fundamental security trust broken. We can check this part ourselves. So in conclusion, the market the Ethereum highway. Usually we compare Ethereum to a highway, and on top of it, various cryptocurrencies and smart contracts exist. That's how we can make this analogy. In the end, it's correct to say that the network itself is still considered safe. However, the specific model of car running on top of it, in this case yesterday, it was Balancer. So you can think of it as a specific application being recognized as having a flaw. So therefore, it doesn't seem to be a fundamental or structural security issue with Ethereum itself. However, the DeFi ecosystem is similar to a situation where countless cars are intricately intertwined and running together. That means if a defect is found in one car, it could lead to a chain collision. Therefore, it can be assessed that vulnerabilities at the application level still pose a structural risk that could threaten the entire DeFi ecosystem. All right, from now on, we need to see how Balancer responds, how they handle compensation, and how they redesign things. And also, there are other applications that use the same code. Now we also need to check the follow-up actions of these protocols. Now another thing is what the regulators are actually saying, whether they make very serious comments or treat it as a rather isolated, temporary issue. This is also something we need to pay attention to. So, by continuously monitoring these three things, we need to judge for ourselves whether this issue will end as a one-time incident or leave a permanent discount on the DeFi sector's multiple. Anyway, as Ethereum has dropped a lot, what about the relative strength index now? It has dropped to 36.95, so the momentum isn't very good, is it? Now, there's something that really stands out here. Due to the recent sharp decline, the key horizontal support line near 3,750 has collapsed. Let me show you. If you look here, there used to be a very strong support line that acted as a key point. Up until now, this support line has defended against the downtrend several times, but unfortunately, this time it was broken to the downside. So, because of that, we have no choice but to rely on another support line below. Now that part, it's from 3,365 to 3,375. This price range is crucial because two support levels overlap here. The first is the horizontal support line. You can see it here, this horizontal support line, right? It was the main low point in early September. Previously, it dropped sharply and then rebounded and surged. So we can expect that a rebound might be possible this time as well. Another thing is this green line here. This green line is the 200-day moving average, which indicates the long-term trend. Fortunately, the 200-day moving average is still trending upward. The long-term trend remains intact. However, if the 200-day moving average indicating the long-term trend breaks downward at the horizontal support line, it signals a serious warning. So, whether we succeed in rebounding in this area, if we do manage to rebound here, we can have hope that the long-term upward trend will continue. But if it breaks down to 3,370, then there's a possibility that the downward trend could become even stronger. I'll wrap it up here. On the first broadcast of every month, I show you the investment returns of the Mizuho portfolio I manage without any exaggeration. At the beginning of every month, I show you the investment performance over the past year, as well as the results for the past month. Let me emphasize once again, the same goes for the Mizuho membership in YouTube. There is a lot of investment information that I provide, and many people trust this information and are investing in United States stocks with me. However, the investment strategies I use may be somewhat unfamiliar. I'm using a strategy called momentum investing, so you might naturally want to check whether this momentum investing strategy actually works and is effective. So my intention is to show you that even with a momentum investing strategy, the returns can be pretty good. That's what I want you to understand. The screenshots I'm about to show you now, I captured these directly from the Samsung Securities webpage. So there's no alteration, and it includes all past trading records such as new purchases, additional purchases, taking profits, cutting losses, and rebalancing. You can see it as an unaltered real investment return. I didn't use my own method to calculate the return rate. It's explained on the Samsung Securities site. Investment return rate equals investment profit during the period divided by the average investment multiplied by 100. That's how you should see it. And the final goal of the Wizone portfolio is 3.3 billion won. Our goal is to achieve this by 2035, aiming for an average annual return of 20% to reach it sooner. That's the perspective to have. And the S&P 500's returns change every year, so you can't just fix it at 20%. My relative goal is to always achieve more than double the market's average return. That's how you should see it. Okay, let me show you a screenshot. This shows Mizuho Portfolio's one-year investment performance. The recent one-year return is 49.57% with a profit of $437,319,396 for the period. So, through investing in United States stocks, I made about 437 million won in profit over the past year. And on the next page, you can see the investment performance for 1 month as of the end of October 2025. At the end of September, the investment funds I had were 1.307 billion won, but if you look at the end of October, this amount increased to 1.406 billion won. The investment yielded a strong profit of just over 98.7 million won with a 7.56% return rate. And no matter how well I did, it wouldn't mean much if the United States market performed better. So, let's compare it with the S&P 500 and the Nasdaq Composite Index. Looking at performance over the past year as of November 1 cent, the S&P 500 rose 19.48%, the Nasdaq 28.03%, and the Mizuho Momentum Strategy Portfolio 49.57%. And if you look at the performance for the month of October, the S&P 500 is up 2.27%, the Nasdaq is up 4.69%, and the 7.56% is up 7.56%. So, in conclusion, as you know, in October, cryptocurrency stocks didn't perform well at all. Especially stocks related to Ethereum and Strategy, these crypto-related stocks plummeted and significantly ate into the returns. However, despite that, I was able to easily achieve my short-term goal of more than doubling the S&P 500's 2.27% return. So thanks to artificial intelligence beneficiary stocks, I had a satisfying month. That's how you can look at it. It's the same for the past year's returns. The S&P 500 hasn't even reached 20% right now. So in my case, I just need to surpass 40%. So far, I've been able to maintain a good return, exceeding about 2.5 times the target. That's how you can see it. But at this point, Julie Choi, who is a United States China subscriber and a paid member, left a very important question. So I'd like to share my answer to that question with you. Julie Choi said this. I think this is really useful and great content, but as a beginner, I'm still not able to put it into practice right away. I plan to watch it repeatedly and study it regularly. I thought prices had gone up a lot recently, so I got a bit scared and sold off quite a few good stocks. But after learning and studying, I really regret not calculating properly before selling. Even if they were expensive or had already gone up a lot, I should have figured out which stocks could still go higher and made my decisions based on that. But I still can't do it on my own. I mostly follow what Mi Jung does, but unlike me, he still holds on to good stocks and doesn't seem to be buying more. So it's getting harder for me to keep following along. If you assume that you sold a lot like I did, which good stocks would you want to buy again at the current price or after a slight correction? I would really appreciate it if you could answer. Let me explain why I chose this question and read it to you. In my United States China All-in-One membership, I have a series called United States China Portfolio Sharing. As you can see here, I share my trades with you every time I make a transaction. But what Ms. Julie Choi just mentioned is this. On October 23rd, I partially sold 3 stocks and bought more of one stock, but since then, I haven't made any trades. So, because I didn't buy or sell any stocks for about 10 days, she's saying that it's impossible to follow along. I'd like to say a few words about this. I do this once a month, at the beginning of every month. On the first day, I share the status of the United States China portfolio investment items with paid members. As you can see here, I show you directly the proportion of investment funds allocated to each stock from 1st to 19th place. And you can also see that about 18.1% of the funds are currently held in cash. I'm showing you this very clearly, and I think this is very important information. Let me explain the reason for that now. Some investors believe it's only a loss if you sell at a loss and only a profit if you sell at a profit. Some people think this way. In my personal opinion, that's a very irrational misconception, because as of the market close yesterday, our past returns are already finalized. What that means is the investments up to yesterday ended yesterday, and today we start again from 0%. That's how I see it. That's because not selling doesn't change the investment results up to yesterday. That's why, if we keep the same portfolio today without cutting losses or taking profits, when the market opens today, whether the stocks had losses or gains until yesterday, from today on, there must be a logical reason for them to rise. So, by holding the same stocks, we're betting once again on their rise in today's market. We need to remember this fact, because for us investors, we have the opportunity every day to change the stocks we're investing in, the ones we're betting on, with just a few clicks. Of course, it's only from Monday to Friday, but anyway, with just a few clicks, you can change your investment stocks. It's very easy to change them. Let me go back to this list I'm showing here and explain it to you. If you look at this list, you can see that I have the highest investment fund at rank 1, then rank 2, rank 3, rank 4, and rank 5. Of course, the investment funds listed here are sometimes ranked higher because their returns were good. But the important thing is, I'm still betting today using this exact ranking. That's what I'm saying. If the number one stock is Nvidia, that means out of the current 19 stocks, there isn't any stock expected to have a better return compared to its risk than Nvidia. So I'm putting the largest investment proportion into Nvidia. And among the 19 stocks as of now, for stocks like Vistra Energy, Stress Ridge, or Ethereum Exchange Traded Fund, since I still don't have strong confidence in them, I'm not increasing their investment proportion much today either. If I were more confident in these, I'd significantly raise their investment share. If you keep this in mind, I think you'll be able to make better use of the paid membership. That's what I wanted to tell you. Now, I also hope that those of you who haven't joined the paid membership can make use of this logic as well. What I mean is, if you look at your account right now, you have an average price for stock A and an average price for stock B. Please just ignore these average prices. For the stocks you're investing in today, what's important isn't the average price or the return rate up until yesterday. What's important is, from this point on, which stock's price movement will be the best over the next 3 or 6 months. I really want to tell you to adjust your investment proportions based on this. Next, we'll move on to causes and results. Yesterday, among the stocks not supported, Palantir, which many of you are very interested in, announced its quarterly earnings. There's positive news that they reported the highest quarterly performance ever. Nevertheless, Palantir's stock price is showing a downward trend, dropping by 4.28%. If the stock price keeps falling like this, you can see it as another buying opportunity coming up. Let me show you why I can call this a buying opportunity. Let's check it out together now. Palantir announced an earnings surprise in the third quarter of 2025 that far exceeded market expectations. Notably, rapid growth in the United States commercial sector, fueled by the adoption of the artificial intelligence platform, led overall performance. And there's one more thing. They also made a significant upward adjustment to their annual guidance. So not only were the results great, but they also raised their guidance, making it a perfect situation. Now, let's take a look at the key results for the third quarter. Total revenue reached $1.181 billion, which is a 63% growth compared to the same period last year. Even compared to the previous quarter 3 months ago, it grew by 18%. Market expectation was $1.1 billion. Expectation was $1.1 billion, but they reported $1.181 billion, showing excellent performance. Now, next is the adjusted earnings per share, or earnings per share. They recorded $0.21, far surpassing the market expectation of $0.17. And the year-over-year growth rate marked an impressive 91%. Next is the adjusted operating profit at $601 million, with a 51% adjusted operating margin. A tech company with an operating margin above 50% is truly impressive. The estimate and expected figure were $501 million, but they made $601 million, earning an extra $100 million. And the year-over-year growth rate was an impressive 118%. Next is the Rule of 40, everyone. The Rule of 40, you might remember it, but let me briefly explain it again. When we evaluate software-related companies, commonly referred to as software as a service, if they exceed 40, it's considered very good, an excellent company. That's how it's evaluated. So what does this 40 refer to here? For NVIDIA, it's the growth rate of revenue plus profitability. The profitability mentioned here refers to margin. So, for example, if the growth rate is 20% and the margin is 20%, adding them gives you 40. If it goes over 40 like this, it's considered an excellent company. Now, what about Palantir? This quarter, its Rule of 40 score went up to 114. That's an amazing figure, and they've broken a record. For reference, NVIDIA is at 120 right now, so you can see that this is an amazing company with the second highest score after NVIDIA. Finally, free cash flow stands at $540 million with a 46% margin. The year-over-year growth rate was 25%. Now, secondly, this time it's about the key growth drivers. Right now, the United States commercial sector is showing explosive growth. The key point of this performance is the overwhelming growth of the United States commercial, that is, the private sector. That's what it says. Now, if you look at the sales, they increased by a whopping 121% compared to the same period last year. They generated $397 million. Next is the total contract value. The United States commercial sector's contract value rose 342% from last year to $1.3 billion. It reached a record high. Next up is customer count. I've often mentioned before that Palantir has had some issues with the number of customers. The number has increased to as many as 530, creating a trend where the number of customers has surged by 65% compared to the same period last year. Let's make a comparison. If you look at the United States government business, the growth rate compared to last year was 52%, and it grew by 14% compared to the previous quarter. Both the United States government and commercial sectors are seeing incoming business grow at a healthy rate of over 50%. Now, next is the overseas sector. For regions outside the United States, it's being evaluated that the growth rate was relatively moderate. Well, nevertheless, you can see that it continued a solid growth of 52% compared to the same period last year. Next is guidance, which is as important as performance, possibly even more, since good guidance sets expectations for steady growth. Now, it says the fourth quarter and annual guidance have been significantly revised. First, if you look at the guidance for the fourth quarter, they confirm sales could hit $1.327 to $1.331 billion, which would mean year-over-year growth over 60%. Now, if you consider all of 2025, sales guidance ranged from $4.142 to $4.15 billion. But with this upward adjustment, they projected a positive trend, saying that it could reach between $4.396 billion and $4.4 billion. If that happens, the year-over-year growth rate will reach 63%. And if we look at just the commercial sector, specifically the commercial sector in the United States, it can generate at least $1.433 billion, meaning revenue in this sector could grow over 104% from last year. These are incredible figures that are being reported one after another. Now, right before the earnings, a very important partnership was announced. I explained this last week on Mijun as well. It's the NVIDIA partnership. Now, NVIDIA models can be used in artificial intelligence platform. Through this partnership, NVIDIA's accelerated computing for artificial intelligence will extend to Ontology's edge layer. That's the key point. Now, in this partnership, NVIDIA's Chief Executive Officer Jensen Huang said, he praised it highly, saying, "This is probably the most important enterprise stack in the world." In other words, Palantir's Ontology. Now, let's review several customer cases. Hospital for Special Surgery, a medical company, used Palantir to automate insurance approvals. A 45-minute manual task was cut to 5 minutes, which made them proud. In the case of Lear, 11,000 employees are currently using Palantir across 175 use cases. They said they saved over $30 million in costs in just the first half of 2025. And what about the American Airlines? They introduced Palantir to reimagine their network planning ecosystem, and they said they've already saved tens of millions of dollars. Lastly, there's BP. In BP's case, they mentioned that they're getting triple-digit returns every year from their investment in Palantir. Let's scroll down so I can read the overall evaluation. How about this quarter's earnings? I want to say it's very positive that Palantir has once again delivered results with actual numbers, not just expectations. Even though the stock price is dropping right now, I don't see any reason for it to go down. Results far exceeded expectations, with revenue, earnings per share, and operating profit all significantly beating market forecasts. Second, the artificial intelligence platform that achieved commercialization. Artificial intelligence is finally delivering results, and we're seeing impressive numbers. The most encouraging part is the phenomenal growth rate of 121% in the United States commercial sector. Previously, Palantir was mainly associated with government agencies, but now we don't have to depend only on that sector. It has proven that it is generating strong demand in the private sector market. And earlier, you saw the number of clients, right? It's still only about 500, and what that means is this. The growth in the commercial sector is just beginning. That's a reasonable assumption. Now, if you look at the market response, before the earnings announcement, many analysts worried Palantir's stock price had surged since the year's start, making its valuation too high. As a result, there were a lot of institutional investors who gave it a hold rating. This time, they reported results well above consensus and significantly raised their guidance. Therefore, institutions like Morgan Stanley and Citi, they evaluated Palantir by saying that explosive commercial growth centered on artificial intelligence platform and an adjusted operating margin of 51% confirmed the artificial intelligence inflection point. They reclassified it as a main artificial intelligence infrastructure software beneficiary. So they upgraded its rating. That's how you can see it. The last content prepared for today is today's United States stock video. Today's video also features Topney again. So far, I've shared a lot of videos featuring Topney with you. So far, it's been Topney, right? With the S&P 500 hitting new highs day after day, Topney's bullish theory is finally gaining momentum. In this video, we'll discuss how the S&P 500 might reach 7,500 by year-end. It's presenting a very rosy outlook for the future. Through this video, let's find out why Topney keeps insisting on such a rapid rise and what logical reasons he has for it. In addition, there's something else I'd like to say. From here on, will the S&P 500 keep going up, or has it risen too much and now it's at its peak? It may correct for some time. Don't try to predict these situations in black and white. I hope you use a strategy that works well either way. That's my wish. What I mean is, if you have enough cash on hand, you won't feel bad even if the market drops. Don't regret thinking, I should have sold my stocks. I hope you keep a reasonable amount of cash. And it's the same if things go the other way. If the S&P 500 keeps rising sharply for the next month or two, it's the same then too. I'm still putting about 80% into stocks or 70% into stocks. Still, it's fine if it goes up. See, it's good if it goes up and it's good if it goes down. This is the kind of situation you should create for yourself. You aren't depending on the uncertain United States stock market future. You can control it yourself. I hope you approach your portfolio with the mindset that you control it and develop a wise investment strategy. That's all for today's stock news on November 4th. Thank you to everyone who stayed with us until the end of today's broadcast. If today's broadcast was even a little helpful for your investment activities, please don't forget to leave a valuable like and a precious comment. The comments you leave give me a lot of motivation psychologically, and they also serve as a source of content for organizing the broadcast. Let's all keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you.
This is Tom Lee from Fund Stress. It's been a while since your last visit. Honestly, even when you appeared a few times before, every time I hear your outlook, I find myself holding my breath, wondering if that's really possible. But strangely enough, most of the time you end up being right. Have you ever felt anxious or hesitant when making such predictions? Aren't you ever afraid that maybe this time you might be wrong?
Yes, always. After all, knowing the future means facing uncertainty.
No one is always right. In this field, even 51% accuracy is considered top level. I still have a positive outlook on the market. Last week, the market was shaken by China's news-driven buy-on-rumor, sell-on-news pattern, but I view it as a temporary correction. I did sense a hawkish tone in Powell's remarks, but I don't think it will last long.
That's right. There are the government shutdown, China issues, and ongoing Fed comments. Even so, the market has already risen for 6 consecutive months. This has only occurred 6 times since 1928. CL Wall has historically shown strong momentum in those situations. The payment source increased and only leveled off in the second year of the new chain. I expect this November to be strong too. Based on the S&P index, I think there's room for at least a 200-point increase.
Number one,
It's monthly leading and might rise by 250 points.
hearing predictions like that can make you nervous. Haha, you could just say it might rise around 3%.
Let's do that. Saying it like that puts me at ease. In the second-ranked month,
If you say it will rise by 250 points, such a specific prediction can only be burdensome.
looking at AII investment sentiment, this year's average sentiment remains at 11.5, signaling an expected decline. In the last 35 years, this figure has appeared just 3 times, all during bear market periods. Even though it feels like a bear market, the market has already risen 17%. This indicates a strong chance of major performance chasing buying near year-end. Over 80% of fund managers have underperformed the benchmark this year.
People seem unconcerned about the lack of government data. Honestly, does the market even wait for it? Usually the market moves before the data is released.
If you look at the Fed futures data, you can clearly see how inflation expectations are being reflected. The Fed also refers to the bond market in the end, and the bond market always picks up on situations before the official statistics do. I think inflation is dropping much faster than most people expect. If you look at the Truflation indicator, the inflation rate excluding housing costs has already dropped to below 2%. That's right. Even the housing cost indicator is now declining. This time, the consumer price index figure also came out just a bit lower than expected. The rate of increase in housing costs has now gradually dropped to about 0.16% compared to the previous month. On an annual basis, that's about 2%. At this level, it's enough to quickly bring down core inflation. Over 54% of consumer price index basket items are now in deflation, the highest since the COVID-19 pandemic began. This means downward price pressure is spreading.
The market appears to have moved beyond closely monitoring inflation and no longer sees it as the biggest risk. Like the Federal Reserve, focus is shifting to worries about slowing growth and downside risks. Just looking at the reactions of stocks like home builders, consumer cyclicals, and regional banks after Chairman Powell's somewhat hawkish remarks last week, you can see how sensitively the market is being shaken. Now, there's growing anxiety about whether this is just a temporary slowdown or a sign of structural weakness. There are also expectations the economy will recover next year. How will this situation affect the movement of the overall index and the expected market trends?
That's what the market is worried about now. It may seem like artificial intelligence is reducing jobs, but in the process, corporate profits are actually increasing. Although over 70% of tariff burdens are passed to companies, their profit margins are still rising. This ultimately means that productivity innovation is happening somewhere. As you said, there's still cash on the sidelines, but interest rates are still high. So it seems that the Fed is moving cautiously to prevent the economy from overheating. But in reality, the housing market is already facing quite a lot of difficulties. So I think if inflation stabilizes and employment doesn't rebound strongly, there's a good chance the Fed will shift toward cutting interest rates. If that trend materializes within this year, I think it will be a pretty dovish signal for the market.
Have you seen the recent articles about the Fed's repo transactions that keep coming out these days? I heard that in the past few days, there have been repo transactions worth $30 billion to ease liquidity concerns. I'm curious about what this kind of move means for the overall market and what impact it could have on the cryptocurrency market. Does the fact that such large-scale liquidity injections are happening one after another signal something?
End-of-month repo transactions are common. Is this the same pattern now? These figures are somewhat distorted by the government shutdown. Currently, with the Treasury's payments temporarily suspended, reserves are piling up. So, while this is something we need to keep a close eye on, if there are real signs of stress in the banking system, we should also see the spread of high-yield bonds widening. Right now, that spread is actually staying stable. It's more of a short-term liquidity issue than systemic risk. Just a bit unfortunate.
Do you think the S&P could reach 7,000 by year end? Do you think it's possible to go even higher, for example, up to the 7,300 level?
Reaching 7,300 is possible. The upward trend should continue in December, building on November's gains.
You never know how far the market will go. Typically, a strong year finishes strong, which is common knowledge. But Tom, there's something I'm a bit concerned about. Looking at the American Association of Individual Investors Investor Sentiment Survey, investors remain cautious, but stock holdings in Bank of America and private client accounts are at record highs. So, while they're saying to be cautious, their actual behavior shows they're already fully invested in the market. In recent months, speculative buying has increased in unprofitable and low-quality tech stocks. These stocks are entirely different from what's known as the Magnificent Seven. How should we address the gap between investors' ongoing skepticism and clear signs of speculative overheating in the market?
That's right. What's certain is that skepticism still exists in the market. If everyone was truly convinced about the bull market, institutional fund managers' performance should have been much better. But as you know, this year is one of the worst years for fund managers' performance in the past 30 years. Another issue to consider is the private market. For example, private credit is currently performing very poorly, and LPs or limited partners who have invested in venture capital or private equity funds are also quite disappointed with the performance over the past 5 years. On the other hand, it's ironic that only the stock market continues to perform well. I think there's an underlying bearish sentiment. Private equity hasn't performed as well as expected, and fund managers' results have also been disappointing. However, as you noted, public equity investors are performing well.
It would be great to wrap things up nicely at this point, but let me ask you just one more thing. It's about Bitcoin. It's bearish today and around $10,700. Do you think it could fall below $10,000?
Do you also see a possibility of it reaching around $100,000? For example, the trading volume of Ethereum and stablecoins is increasing explosively, and application revenues are at an all-time high. In other words, right now, fundamentals are driving prices in the cryptocurrency market. I believe the market will rise after an adjustment period by year's end. Yes, I think Bitcoin could hit $150,000, $200,000, and Ethereum about $7,000.
The beginning of a dream is important, whether you're sleeping or awake. Be a little ambitious and grow bit by bit every day. Enjoy today's journey. Even if dark times come, I'm not afraid. Retire with United States stocks.